Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick with you on this yo-yo morning. Markets are back and forth here. Can't quite decide which direction they want to go. One day it's up, one day it's down, next day it's both. We'll talk about that. We're talking about some earnings this morning. We had Dick's was disappointing. Stitch Fix was disappointing after the close yesterday. I want to hit on GameStop briefly because it almost got to 240 this morning. Our guest is Nick Chahine. He is the author of Create Income with Option Spreads and sellspreads.com. He will join us at 8:35 as he does every other Tuesday. I want to remind you all to smash that like button on YouTube. Thank you very much. I will throw it to Joel now. And Joel will update us on how we are doing this morning in the pre-market trading session. Joel.
Week close, big bounce overnight. Pre-market low, $7 above the close, 26 and a quarter. That looks safe for now. Pre-market high, 65.50. That's shy of the high from Monday. Our Monday's high came in at 78.75. Looking for perhaps an inside day today, folks. We haven't had one of those in a while. Crude up 45 cents at 65 and a half. Gold back above 1,700, up 25.80 at 1703.80. Silver up nearly 60 cents at 25.88. Bitcoin, big boys liking Bitcoin. Bitcoin's up $2,060 here. These are the futures at 54,200. We're going to bring in Triple D. Triple D, it's going to be a minor tangent Tuesday. Very minor.
Probably for me. I am massively distracted here today. I contemplated not doing the show, so I'm going to try my best here. I had over 100 positions overnight on, and I am short a lot of tech stocks, and that is not good news. I'm also long a lot of tech stocks, because you know how I'd like to trade market neutral. I was trying to do sector hedging, but I didn't do very well, apparently, because some of the tech stocks I'm short are way up. So anyways, it's going to be an interesting day for me, one of those days.
So does that mean you don't want to hear my quick tangent?
Yeah, you can go on all your tangents because that gives me a chance to trade.
Go for
it. Spencer mentioned, and I mentioned the yo-yo market. And on the pre-market show, you were busy digging yourself out of your hole. We talked about yo-yos. Remember yo-yos, Spencer?
Oh, yeah.
Did ya? And remember all the tricks that you used to be able to do with them? Walk the dog, around the world, cradle.
This is all the toys they had back in the 1900s, Joel. The early 1900s when you were a young chap.
Yeah, around the world. You just had to be careful you didn't bop somebody in the head when you did the around the world. But okay, that's it. My tangent is over here.
So it's the yo-yo market.
Yeah, for sure.
Sell them all day yesterday. We buy them overnight. What do? We buy the dips and sell the rips.
It is.
You're buying stocks yesterday. You're buying those tech stocks and ripping up 5, 6, 7%. I think if it's just trading, I think you booked the gains. I mean, I put 2 stocks in my long-term portfolio yesterday. I put Marvel Technologies, which I've wanted for a while. I talked about at the 40 level. It got there. It kissed it. It's bounced $1 here this morning. I'm going to hold on to that. I also bought First Solar. I bought First Solar yesterday. It's been really beat up. I wanted to add a little bit more solar exposure. It's one of the bigger names. It's there's other sexier names out there. But this one's, the beta's a little bit less, which is more kind of up my, I don't like these wild ones in there. So it's pulled back significantly. So I had a little First Solar, a little Marvel. Those were my 2 ads there yesterday.
Do you put out a sheet like after the close with the changes in your holdings?
No, I don't. I'm sorry. I don't release. So yeah, these are my 2 buys and these were my sells. And everybody could wait for the Triple D buys and sells here. What did Triple D buy today? What did he sell today? Well, I bought and sold a lot of stocks. I was in and out. Kathy's doing a lot of day trading too, though, like her short-term trading, because you love
think so?
see. Yeah, some of those stocks. She was selling ICE yesterday. She was buying that like a couple weeks ago. So they're moving in and out. And you know what? It's the theme is that she's selling, and she was even talking about this. She's selling higher market capitalization companies and buying small cap. You can really see it in her holdings. She's buying just a lot of small cap names. It's a little bit scary in that way, is that, we talked about the potential of a liquidity issue there. If, it really got ugly, I mean, the liquidity on some of those smaller names she's buying is very low. Like she keeps buying this BFLY. That's a thin stock. And if she really, if it really got ugly, this is scenario analysis. We're not saying this is going to happen, because I set up a scenario analysis and everybody will say, oh, Dennis said, Kathy, it's going to have liquidity. I'm just saying there's a scenario here where if it really got ugly, and she started to get massive redemptions, and she had to actually start selling some of these small cap names to meet those redemptions, she would be really hammering her own stocks to try to get out, because that BFLY that she keeps buying, that thing's thin, man. That thing trades 20, 30 cent spread sometimes. Like, look at how wild it's been. It was $28.93 a week and a half ago, or 2 weeks ago. Fell under 15. Now it's back up to 16.90. I mean, I don't totally, I guess she's in it for the next 5 years, and she just, doesn't, care. But again, when you've got, flow coming in and flow coming out, she's benefited from so much flow coming in. If people start getting concerned that, well, I'm not doing as well as I was doing with Kathy last year, and start, saying, okay, I want to sell that, and I want to, I'm going to move on to something else. That's a scary thought if she actually started to get some outflows here. So if market bounces back, she's going to do great. She'll beat the market. The market tech continues to sell off, and the tech stocks continue to get ugly, and they continue to punish high PE names and buy low PE names. She could have some problems, like not, but she's her fund is going to definitely underperform if we continue to have the tech route that we did. But today is a great day for Kathy, so we should give her some love. She bought some stocks yesterday. I'm sure she's up in them this morning. We're seeing overall tech very strong here. And a lot of the small tech names are leading the way. So Kathy's having a good morning.
Okay. All right. And I'm looking at the big boys here too, and they dragged us down yesterday, and they're all bouncing back today. Apple, Microsoft, Amazon, Google, Facebook, and Tesla. I just want to alert our traders / investors, whatever you are, huge level in Tesla. Boom, boom. You had a monthly low in December around the 540 area. I'm looking right here. Right, 539 and change. You got the 540 and change. Huge, yes. And and this was this was the start of the run up in November, when the came off the split. Well, the split was in August. That was ridiculous. And then the S&P ad, and then everyone. This was like, okay, it's out of the S&P. It's toast. No, it goes another $200. So this is a big area here. If this holds, this could be just a really nice spot for potential longs or a short area. But I keep an eye on 540 in TSLA.
Mike's saying Tesla's upgraded today. Is that the case? I'll be honest, on these days.
We've been looking at great. Yep.
There's so here's a tip for you. On these days where everything is going on, analyst action kind of goes to the back burner. You won't see traders focus on as much. When there's, SPY is up 10 points or down 10 points, and not much is happening. It's like, okay, well, what's the analyst doing? Where's the action? The action is everywhere. So you're going to see, a lot of ratings, and you'll be like, why is that, not responding? Like we even saw a big note from Citi on like Lowe's and Home Depot, and they put them all at buys. But if you look at Home Depot, it's up half of what the market is, because it's all about the rotation right now. It's not about the analyst action there. Yeah. So I never even looked.
So it's just a small firm, New Street Research, upgrading it to buy. Again, but even if it was a Goldman Sachs, to your point, they're not gonna.
They're not worried about ratings today.
The market doesn't care about that right now in this stock. Maybe it will in the future, but
not on a day like this when you have this kind of action there. So.
I would say not only a day like this, Dennis. Though it's just like Spencer and I started doing the At the Close show. I mean, it's really since been the pandemic, right? We used to cover ratings a lot more. I mean, I put them in the dock now, but unless we run out of things, we really, I mean, there's just too much macro going on. There's too much with the bond yields. There's too much. I mean,
a lot of action. Too much with GME.
Oh yeah.
There's a segue for you.
I mean,
I brought it over there. I did it.
How high did GameStop get this one? 238.
Holy cow, man!
238, I think.
We've liked this. We've liked the technicals.
We like it. I haven't owned it, but I like it.
I liked the technicals for the last 3 days. It looked like it was ready to break out, and it is. Again, I can't wrap my head around, paying this kind of valuation for this company. So I don't even, I've traded a couple times, but I'm not putting it in a swing trade even because I don't know. They do an offer and they do anything. But, I mean, the technicals were set up well. So congratulations to those who went long yesterday. I know I had a couple people reach out to me saying that they bought it. Great job. Stock went up significantly yesterday and continuing to tack on the gains. Our GME indicator would say that this market might eventually roll over if GME holds on to these gains. Again, I still think there's something there. I mean, the TLT is leading the market more than anything now, and I haven't been looking as much at the GME indicator, but it's basically the market is a joke indicator. So, you can't trust price. That's what GME tells you, that price is fake. And it is. Price is real. You can sell it here today, but price does not equal any valuation whatsoever. Price is completely disconnected from fundamentals at GameStop, and the market probably questions whether it's disconnected on everything else as well, which I believe it is. So that's why, stocks can really go anywhere. It's all about story. We talk about that all the time. If a hot story goes, valuation doesn't mean anything. Valuation has started to mean stuff in certain, but even the Cathy stocks, you can say, oh yeah, it's coming down because of valuation. Well, we didn't care about valuation for the last year on the Cathy stocks. We all of a sudden start caring about it now. It's not so much that the valuations, coming out of the Cathy stocks. It's that the story's gone a little cold. The hot Cathy story's gone a little bit cold for now. So does it get hot again? I mean, she's got such a following, very well could. So, it's just a very crowded trade. Everybody's piled into these Cathy names, and it's very, very crowded. So, that's why I continue to say these Cathy pops and these Cathy stocks have been a sell. We had that SEER one that we talked about, and I tweeted out Friday night. It had closed at 43. Somebody just so excited that Cathy had bought it up to $51. Well, in one day, because they chased Cathy, and Cathy's not telling you to chase her. She was buying it less than that, but you're paying up 20% for a stock that got hit hard. That's why I was like warning people on Twitter that you guys are doing this wrong. I literally said, if you're buying up a Cathy stock that got pounded and you're paying 20% up in the after hours for it, you're doing it wrong. And that person punished severely because $51 it was trading at. It opened at like 47 straight down from the open.
What's the symbol on there, Dennis?
SEER.
Okay.
Simon Edward Roger. And gave it all back. Closed right on the low tick. It's bouncing here a little bit this morning. I don't know. Maybe she bought some more. It's bouncing a little bit here.
Jeez.
There's a lot of bag holders in here. Could have bounced to 45, 46, 47. It could. But jumping in and paying up $5, $6, $7. Nobody's doing that to last night. But the night before, it's like you're giving up all the edge, and you're probably on the wrong side of the trade. Like, not even about giving up edge. You pay up $1 or $2. It's like, okay, well, maybe it could go up $1 or $2. It wasn't going to go up $6 or $7 the next day. It's very unlikely. So, there's just an opportunity there. If you're long these things and you see a huge Cathy pop after hours in your name, sometimes it's not a bad idea to ring the register. And in some cases, I do short some of those pops if, it just gets overdone. So there's been an opportunity to fade some of these pops.
I mean, she's traded some of these newer issues too. I mean, I'm looking at not all of them, but man, like this stock's only been around what? This is the 4th month of trading. It seems like whenever I bring these up, it's like limited history. So she must be drilling down on her homework and finding out about these new stocks, these new issues. But
she has such a team, Joel. I mean, she knows about all the new issues. Her team. Is the growth team. I don't challenge their research. I don't challenge she's very smart. I just challenge the reason I don't invest in Ark. I trade all the stocks. The reason I won't buy ARKK is I just challenge that you cannot buy growth at any cost. I'll tell you a story. So when I first started at Bright Trading in 1999, I was coming out of college. I didn't have any money. And, I was day trading, just started at Bright Trading. By the second year, or by the end of the first year, I'd made some money. So I took some money and I bought some mutual funds with that money. Back then, I remember we were buying mutual funds, and I bought, this was end of 1999. I bought a couple of tech growth funds. So, like literally set up funds that were very similarly structured to Kathy. And I bought, I put a bunch of money. I think I put, I don't know how much money. I think I put like $5,000 into the one tech fund. It was a high growth tech fund. In the first 3 months of 2000, that fund went from 5,000 to like 6,500. I was like, wow, this is, I'm a genius. I'm an investing genius, to go buy this high growth stuff. And then the tech bubble burst, the March 2000 tech bubble burst. And that $5,000 I put in that tech fund that went to 6,500 by March 2000. 1.5 years later, you know how much it was worth? That's $6,500 in a diversified growth tech fund.
How much?
$300. It lost 95% of its value. 95%. Why did it lose that? Because it was buying stocks at unreasonable prices. It bought a whole pile of tech stocks paying 60, 80, 100 times earnings. And the tech bubble burst, and valuation all of a sudden mattered again. So I learned the hard way. And from that lesson, which was nice because I lost on a very little bit of money, but I didn't have much money back then. I learned that, okay, I'm taking more of the Warren Buffett approach, that I like growth. I want to buy companies that are growing, but I got to do it at a reasonable price. So I think Kathy is an eye for growth. She's done fantastic. I just challenge that you can just pay any price for something, because if you start paying 50, 60 times sales like in Zoom, and I'm on the record saying I think Zoom is eventually under $100. I've been saying that probably since it was like 300 and it went to 500. Now it's back to 300, so I've been wrong. But I just can't see how, and in some cases you're going to strike gold, like in Amazon. You can say, well, Amazon was back there in 2000. It was trading at high valuation. Well, that company, Bezos, turned it around. But not all of these companies are going to do that. So there's going to be a few Kathy holdings that are going to go up significantly from where they currently are. But you just got to watch what you're paying. And I just challenge her valuation on a lot of stuff. And that's why I don't invest with Kathy. Not saying it's going to happen. Maybe this is different. Maybe she's going to pick every Amazon company. Maybe she's just that good, and she's going to she's going to get all the Amazons of the year 2020, and it's going to continue to go higher. But if you're just buying random growth tech stocks, regardless of valuation, eventually it comes back to bite you in the ass.
I got a good story too here. This is I have my charts up. I have the Goldman Sachs Internet Tollkeeper Fund. And in March of 2000, I'm like, well, hey, man, I just got to own this stuff, right? And, well, I don't even know if it has the prices in here. So I put more than $5,000 into this, a lot more. And
what was that? What was that?
The Goldman Sachs Internet Tollkeeper Fund.
GITAX.
So wow. the toll keepers of the internet. So maybe like switches.
I don't even know. It was
it just sounded cool back then.
It sounds cool. I don't know what it does.
It was definitely a cool story. Yeah. We liked Story back in 1999 as well. Story's not a new thing. Story was cool in 1999. Yeah. Just valuation became cooler 3 years later.
So I bought here. Okay. Right where my cursor is. And then I looked at it and I puked about half of it somewhere. I can't remember. I took a huge haircut. And I said, you know what? I'm just going to hold on to the rest and see what happens, And I don't know. I mean, I don't know if I still have any of it or not, but I bought it at 22, saw it go to 4, and then it just hit an all-time high at 30. But that's my foray into tech funds. That was a long time ago. The Goldman Sachs, definitely an underperformer. Definitely top tick that investment. We have some stuff.
We all have bad investments. We all get.
Of course we do.
And you know why? That's why you stay diversified. I'm going to say if you're all growth tech, you're being punished severely. And if you were all growth tech in your portfolio and you're being punished severely today, well, you know what? You were making a lot of money, though, all the way up. So you're probably still sitting on a lot of gains. So maybe it's time to reevaluate in today's rally and say, if I really was down, if you were down 7, 8%, the other day or even yesterday because all your growth tech names, you got way too much growth tech. So if you looked at my portfolio, I have a little bit of growth tech. I got a lot of mega cap tech. And I got, some value names. Like some of my value names, like I have NUE. I mean, that was killing it yesterday. So I've got the whole Kramer barbell approach where I've just got a little bit of everything. I got some preferred stocks. I got a little bit of everything. So, overall, I'm probably just buy SPY, and it'd be similar to what I have in my longer term portfolio. But it's more fun this way. It's more fun this way.
You get to whine about it more when you have.
Yeah, you get to whine about it more. Yeah, there you go.
Yeah, but when you have like the S&P, the funds, or there's one that pays a little bit higher dividend and stuff, then you just say, okay, S&P's up, I'm okay, good. Up point, that. But that's the way. Everyone has a different style of doing it. We got some earnings here, and they're not all so good for the retailers.
You won't know. Well, and it's not just brick and mortar. It's e-commerce as well. Let's start with SFIX because this was out yesterday, and it was not a good report. The EPS beat. Fine. The sales missed, and then they lowered their sales guidance. Two main reasons. One, shipping delays, and two, a lower customer spend. So customers are spending less on their platform.
This stock is a poster child for what we were squeezing the shorts. I mean, everything went into this.
110
from January. It was the squeezing of the shorts. It was a higher tech growth theme. The valuation was silly. We're in from 60 to 110. I think you forget about all that. This was just a ridiculous run in itself, and now it's given back the entire ridiculous run. So now it's time to reevaluate. Maybe I look at this one again. At $50, $53, because you do have some support in here, 54, 56 from technical basis. You'd think this is a logical area for it to bounce, but again, they're so crowded. People loading up in this thing saying, yeah, this is the big name. Again, you just got to be careful with what you're investing in. You got to have some regard for valuations. So this is giving it all back. I think I got to sit down and crunch the numbers on this and see if there's any value here. But, at a certain point in time, there is some. But, man, it was such a ridiculous run. I still think this thing's probably, if I had crunched the numbers, way overvalued.
Interesting chart here. It's so sleepy, right? I mean, you had to spike low to 50.05. And look at that, $50. Look at that. When it gapped up, I don't know if it was off the last report or something. That was the area. So it's tempting there. But man, you got the big gap in this area. I just say someone is saying, I want out, I'm short, or I'm covering a long, or I'm covering some puts. I mean, look how quiet it is here at 52. And
it's because it's been crushed, and then you have all the people who are along it. They don't know what to do. They went from maybe Stitch Fix going to beat and bail me out because I've had some big losers. Now they're way down. Again, when trend breaks on growth names, you got to get the hell out. Run when trend breaks on growth names. Again, the page 16 or whatever, I call it the gap. This is my own thing, my own analysis, and I've talked about it before. Got the growth names going up. All the Momo guys are in there. They love the momentum. They love, that it's going straight up. Trend breaks. Momo guys say, I'm out. Value guys are way down here. They're like, yeah, it doesn't make any sense at that price. I'm not coming in. Momo names guys say, well, I don't want to own it either because the trend is broken. Like the JC Peretz are out. JC Peretz, fantastic trader because he trades the momentum and he gets the hell out before when they start to break. Jeremy Newsom, same thing. He'll ride the momentum. Momentum starts breaking. He cuts his loss and moves on. There's that huge gap. It's called bag holder. And often you see what happens is if the momentum doesn't come back over the course of a long time, it can eventually fill that gap. And eventually there is some value down here. We saw this with all the tech bubble bursts and everything. So that's what I call the gap between the Momo traders and the value traders. And there's an air pocket and a huge air pocket in so many growth names because of that. And that's why they come in so quickly. The crowded trade starts to come off. There is no value buyers because they're way down here and saying, like Warren Buffett is saying, you're nuts for paying that. And you were, but you know what? You weren't because you had the momentum going for you. So it was a great trade at the time. Just these long-term investments can get you. So that's the problem.
Could you repeat that, Dennis? Could you repeat that? The momentum trade, the value traders, momentum traders. I followed it. I actually did.
I've said this on the show before. It's my own thing. I call it like the value Momo gap. Where when momentum breaks, there's no buy. Who's the type of buyer that's buying? Something that's traded like 60 times sales. Who's buying after it breaks trend? Who's the buyer? The value guy isn't coming in there and saying, oh, yeah, you have a few people that are like, oh, I think it's cheap and eventually going back. But, the smart traders that are following trend breaks, they get out. It's what you got to do. If you're in these Lomo names, by all means, a trend's your friend. When that trend breaks, it's time to hit the exit button because when they come off hard. Tesla's the same thing. It's kind of broke trend here now.
I know.
So you look at it here. It's still almost there, though. You could almost still argue that trend is still there. So on Tesla. So I would say if it goes and breaches at 539 low from a few days ago, then you got trouble here too. That's just technicals, though. Tesla's still got a story, but the story's ice cold.
What do you think, though? So when I look at a chart like this, and I maybe when Raz comes on Friday, I look at this, and I just and I may be wrong, but I just don't see it going back to 900. What's
going to carry it there?
I have no idea.
The story gets hot, but again, if you think Tesla's a technology company, but I think that's more growth investors just justifying a crazy valuation. That's my thoughts. That's my opinion.
Well, the argument
it's been crazy for a long time. Though. It could continue to be crazy. So it might get hot again. It could go back. It could.
The argument is that Tesla.
You own it, Joel.
I know. I
You're
don't
talking
want
against
to.
your book.
Wait. Let him finish. Let him finish.
Go.
This is the way Tesla goes back to 900. Okay, that no one drives any cars but Teslas. Okay, the people aren't driving, and then there's all these driverless vehicles that are Tesla vehicles going and picking Spencer up at his apartment, driving them downtown, dropping them off, and then he programs it to come and get them, to take them home, and it's just all Teslas on the road. I mean, I don't think that's happening. I mean, that's what Ron Barron was, explaining about it. So I know there's a future. Car industry is changing. I've been saying this for a while. I think there's going to be less cars on the road. So if there's going to be less cars, there has to be more Teslas. And I think right now, isn't their market share? Isn't it kind of waning right now? And instead of increasing, all these competitors
it has to go down. Their market share
Tesla
is super
just
high.
isn't cars, but it moves off car reports.
It can only go down.
Their market share is so high, it's going to go down as there's more choice out there. I mean, their market share on EV was something like, what was it? It was over 40%, wasn't it? Of the overall market? It was huge at one time. So it's going to go down. But again, if you're looking at it and they're going to go into other things and they're going to do other things, I mean, then that's that's the justification for the price. Obviously Kathy Wood's been a lot smarter than me on this. So, I haven't participated. Besides, from a trading perspective, I have not invested in Tesla in a long time since I wrote puts back when the stock was like, I lose track with a 5-1 split when it was like 300, and I bought the stock and I wrote the 100 puts, which would be equivalent to $20. That was the last time I put Tesla in the long-term portfolio, and then it went up a bit, and I sold it. Sold it way too soon. I always sell too soon. So.
The Tesla chart interests me because remember, for 5 years, the stock basically did nothing, right? It was a growth story, but the stock was a yo-yo. It was, I think, pre-split, it was between 2 and 400 for 5 years, or 2 and 500.
Long time, yeah.
For 5 years, it would go to 2 and then up to 5 and then down to 2 and then or 450 and then down to 2, up to 400, down to 250. And so it feels like it's just it made up for those 5 years of yo-yos in a year and a half, right? It just made up for it, right? And then when you adjust for the split, it was basically, or when you account for the split, it was basically just between 30 and 60 for 5 years. So I just find the chart so interesting because it made up for 5 years of doing nothing, and in within the span of 1 year, it's almost like it just played catch up. It just played catch up. So
got hot, and so many stocks just ripped. I mean, this isn't just Tesla. Tesla was the poster child for it all, but so many stories like that.
That's the thing. It's hard to look at every single growth stock ripping higher and not want to partake. That's why I found myself I've got 30-40% of my portfolio is growth tech. I own a bunch of growth tech ETFs, and I'm looking around now all right, now what? Because I just had a lot of fun for the last year, right?
Yeah.
It's not so fun now though. So,
And maybe it gets fun again. Like, we don't know. Are we in we saw some vicious corrections in 1997, and remember the Asian currency crisis, and they were hammering all the obviously you were in diapers still, Spencer. I think 1997.
I do not remember that, as a matter of fact.
But the Asian currency crisis was 97 or 98. They hammered some growth tech back then, and it all came back and kept going higher. So we don't know. Like, are we in 1998, or are we in now April or May of 2000, and the tech bubble has officially burst? We don't know. So, this could be a great opportunity for a lot of these names. But the ones I'm buying, the stocks that I've bought, I'm buying coming in, and, like I bought Marvel Tech. Look what I bought, Marvel Technologies. Here's a company. I believe they're going to benefit from 5G. The valuation is reasonable. It's not super cheap, but it's reasonable. I think that goes. I think First Solar, I don't think the solar story is going away. I was saying TAN too. TAN would be a good way to play it. It got right near the year lows. I should have bought some more TAN yesterday too, maybe, but I picked on one specific stock because it's more fun.
TAN's growth. TAN's been getting washed. TAN's growth.
What's that?
TAN's a growth. That's a growth ETF.
That's why I probably stayed away from it. I feel like First Solar's a more conservative name. So it's my style. I mean, I've been burned. So if you haven't been burned, you're going to not be so risk adverse. I work really hard for my money. I don't like to see it all go up in smoke. I don't like to be down 30% a month.
Yeah.
That's not
right.
My portfolio. Unless the market, unless we get into May or into March of 2000 or 2020 and we got a pandemic. And even in that, obviously I was raising cash because I was concerned, but I don't like my portfolio going down 30% a month. That's what Ark just did. I mean, so that's why I couldn't stomach that, but if you can stomach it, it might, we might eventually be back up there. We just don't. If we're 1998, you're going to see this Ark eventually trade higher. If we're in April of 2000 and we're just started the great tech bubble burst, if we've just started that, that's scary. So we don't know. Nobody knows anything.
Yeah, and Sean in chat asked, if today is going to be a turnaround Tuesday. I wish we knew. I mean, Joel can look at the overnight session and tell you what that is forecasting, but
I have a feeling it's going to be an inside day. I don't know why. I mean, because it was such a wild day yesterday. It's the day before the rollover. Wednesday's the volume really starts to switch over. So I don't know. I don't know. We our low 26.25. The low, I go with the Globex low. I don't mess around. Or the intraday low, I note on my sheet, but that was 96.25, and then the high was 78.75, and we got to 65.5. So I think if you're trading like the 38.40 to 38.60 area, it's just gonna be vacuum. But we'll see.
Just to be clear, what does inside day mean? Does that mean we're all afraid to trade, so we stay inside? Is that what that means?
Joel, explain inside day.
We stay in our bedrooms. We stay inside.
Explain the inside day.
Inside day is where you don't see the previous day's low, so you have a higher low, and you have a lower high. You stay within the range here. Let me pull. I don't know if we have the ADS. What's best? Yeah. What's some of the best setups is like 2 inside days in a row, like an inside day.
You go with the break.
Yeah. But that's and like Friday was a wild day, Monday was a wild day. So I'm just thinking the market's just kind of like, going to get ready for the NCAA tournaments at the end of the week, the rollover. There's other things to focus on. But that's what we'll see.
SPY is a good call on that because SPY has held up so well. I mean, the rotation is just helped so much. Again, I'm going to say, if you're hiding out in ExxonMobil and you're hiding out in Chevron, you think Chevron's making new all-time highs. I completely disagree with that. This is an unbelievable opportunity to get out of some of those oil names. These oil names are not the future. EV is still the future. You're in these, this dirty oil names, and yes, I know there are people are going to say, yeah, but they're moving into EV and they're moving into, and Suncor's got wind turbines and and all that, but still, the bulk of their money comes from a fuel that I don't think is the fuel of the future. So Chevron, going from $120 to $50, yes, it was overdone. Now we're back here at 110. Now you're going to come in and buy Chevron, and there's so many people tooting the horn and saying this is Chevron's time. Well, it's been its time for the last 3 months. This is time to ring the register. This is time to take your money and reallocate it into some other stuff. Am I buying Zoom at 50 times sales? No. Am I buying Elconin at 50 times sales? Yes. But there's other, good. There's a lot of other good companies out there that are on sale.
Hey,
So
on the Chevron note, on the Chevron note, they do have an investor day today or an analyst day. Same thing. So that'll be intraday. So watch out for headlines on Chevron today because there could be some. And then I want to read you the stat courtesy of the Wall Street Journal before I bring on Nick Chahine. The NASDAQ composite has moved 1.5% in either direction for 6 straight days. It is the longest. It is the longest stretch. Wouldn't you know it? Since last March. When it moves 1.5% for 15 straight.
Love the volatility.
Yeah.
I love the volatility.
And then just one final note before we bring Nick in. I know it's a minute late here.
Yeah.
This volatility is not. I mean, if we gotta calm down. We got to calm down before we start going on this. I would rather see us have those average daily ranges get back to 30 and 40 and those boring days where you just go up a little bit, down a little bit, up a little bit more, down a little bit more. These kind of things don't set up so well, but you do have the circumstances, like I said, with the roller in a quad wedge. But let's see what with Nick. It feels like we haven't talked to Nick in a month, the way these markets have been.
Nick is here. Good morning, sir.
Good morning. Great debate you guys are doing. I'm like, I'm taking notes. That's awesome stuff. So
nice.
I picked up on what you're saying, Dennis, earlier. I forgot who said it about control. Like, who's going to buy this? So my thing last few weeks actually to look for control change. So you're saying who's going to buy this, and there are a lot of things to look for as far as who's in control. And I contend that the buyers are still in control on many of the things. And as far as growth, who's buying growth? Nobody. The growth companies that we knew, the giga caps, they're no longer mega caps, are down 20-25%. Nvidia, AMD,
Nvidia, holy.
Amazon, I think. So they're down quite a bit. So they're not in control. So you have to see the control thing, because it's what happens with the pop. That's what control changes. So like you're saying, they will sell pops when control flips, and it hasn't flipped on higher time frames. On the lower time frames, maybe, but not on higher time frames. So there needs to be that distinction. And I also picked up on your Tesla conversation. I wanted to pitch in also on the solar conversation. So if you want, I can share my screen.
Sure.
Yeah.
Okay.
I love screen sharing.
All right. So let's see here. Share screen. Share screen, but
Yard stream's a little different.
Select a window. Hold on. Whoops.
It's at the bottom.
Yeah, no, I found it. I'm just trying to see which screen. Okay, I think this one is it. Yes, I'm going to allow it. There we go. Can you see it?
Yep.
Okay.
Yeah, got it.
All right. So what we were talking about, Tesla and First Solar. So I'm going to show you something about how I would evaluate both of these. So this is First Solar, and this is not very exciting. So why isn't solar growing? Assets are not growing. The top line is not growing. The income statement, is it growing? Revenues, not growing. And then you go to statistics, it's 20 PE and 3 times sales. So it's not very exciting. So something has to change for this stock to change in my perspective. Oh, and before I go away,
it's not a growth stock. First Solar isn't a growth stock like some of these other ones.
Right, but I'm saying, like, if I were to buy a dip, this wouldn't be it, because this rally was on a headline of Biden, and it's giving itself back. So I'm not sure what's the next cause for the rally, is what I'm saying. And the fight for control is ongoing on the daily chart, weekly chart. Sorry, if I go to the daily chart, the sellers are already in control. So I contend that pops in this towards 82.50 will be sold. So if it pops to 82.50, I would offload my longs that were in trouble rather than load new ones.
Yeah,
that's my opinion.
What are your other solar thoughts? Like tan.
Okay, so it probably looks the same. Somebody
probably
asked
the reason I go for solar is I know the valuation is lower.
Right.
I'm a value guy. It's my style. It's not a trade. This isn't a trade. It's just I'm a value guy.
I don't pick First Solar over tan.
Earnings.
I would pick First Solar over tan because I can calculate First Solar stuff, and I don't want junk that comes with an ETF. So in this case, it's closer to its base because this is point of control, that orange line. This is where literally it has the most action. So as it falls back into it, they're going to be active again. Both sides, buyers and sellers, love it equally. So they're going to provide it support. But what happens on the pop? So again, if it pops to 92, it's going to face this candle right there, which tells me that that was a point of contention at some point. It's going to find some selling into 100 as the moving averages trend lower. They're going to be selling points to machines because they do most of the trades. So let's look at the argument of Tesla, like who's going to buy Tesla. I went long Tesla, and you know me, I'm not a fan, mega fan of the company. I was wrong about it, and they changed some things. And let me show you, same as we looked at First Solar. So this is Tesla. The income statement is growing. Look at the assets. Plus, when did they buy those Bitcoins? Bitcoin is over 50,000 now. So how much is the asset line going to go up next time we see it?
It's such a small, though. That's such a small piece. I think it was like less than 1% of their cash holdings or something.
Yeah, but if it goes up a billion%, it's going to make a dent. I'm just saying. So 11 billion to 31 billion from 2017, and most importantly is the cash from operations has grown tremendously. Net income grew. So it is a viable story now. 2 billion operating income, and then you go to statistics. This number is a little high, 21 times sales, but it's not crazy high like Zoom and all the other guys. PE doesn't matter at this stage, it's still growing. And here's the biggest question. You guys were asking who's going to buy Tesla. So if the market for vehicles is 90 million a year and only like maybe 2% of it is EVs, well, if everybody's flipping and everybody is flipping, it looks like the big car companies are committing to EVs. Everybody that buys a new car is going to be in the market for an EV within 5 years. And that's what, 15 million a year in the US, I think, run rate. So there's plenty of growth. My son made this comment this week in my neighborhood. I was like, everywhere I freaking look, it's a Tesla. They're everywhere. So, but it's only localized market.
That's fancy neighborhood that you live in.
Can't afford those Teslas around us.
they're all dented. Well, you guys live in cold areas where batteries probably don't do very well, and heavy cars that have slick tires don't do very well on snow. So what I'm saying is the market for cars is like 15 to 18 million. I don't know the new numbers a year. If you say they're going to flip to EVs from ICE, that's all EV potential for all the EV companies.
I think there's lots of growth in EV. But I won't pick on Lucid Motors or things like that because those are niche markets. It's the big guys that are going to eat do the flip, not the little ones. Like probably all but 10% of the little ones will disappear. What about Ford and GM? Ford made a new 52-week high yesterday.
Well, I called Ford. I called Ford along for my team under 7 last year.
That's I said I'm buying everybody on this show bought it. Joel bought it, I bought it, and Spencer
so
bought
I said, I'm buying a $7 call. That was like 80 cents, I think. Same with GE. Up here, I don't like it because I don't like the chase, but I don't want to short it. So this is a weekly chart. I turned the look into the weekly. This looks like a level where people who were stuck in it might want to get out. So there's no way you would find me going long a stock that's going into a prior ledge like this one. If I'm not long for it, I should say, you know what? I'll catch it on the next drop, and it will come at some point. Nobody thought Square was going to drop ever, and it got shellacked. And now people will probably chase Visa when it's up in open air. I'd be doing the opposite. I'd be rolling out of Visa if I'm long it and buying something that got beaten down like Square, even though it's not value. And
yeah, it depends on your style. I mean, you're talking trading. I was talking investing, which is a little bit different.
Even investing. I mean, if you believe that electronic transaction is the future, Square and PayPal are the leaders, and Visa and MasterCard are copiers. So you have to admit that the investing long term, you have to take risk on something that doesn't look like a solid proposition now. But we all know that the fundamental idea of electronic transaction is the way to go for everybody. That's what the pandemic did. It proved to even the holdouts, you know what? I got to get on this internet thing because I may not be able to leave my house at some point. You know, the you know what hit the fan, and it put the fear in everybody. Everybody rush to the internet. Nobody's going to leave it. It's pretty convenient. So it's crazy what's going on these days. But this is not the big one, Elizabeth. Just treat it one at a time. So let me give you a picture.
Sanford and Son.
Yes. So this is the picture of the indices this week. These boxes were the straddles from Friday. So the market makers are telling you the price action should be inside these boxes. Okay, so this is the S&P on the top left, SPX. This is the Dow, the DIA ETF. I can't find a good one in TradingView for the Dow index. This is the RUT. Everything is orderly, right in the smack mad. So if you sold iron condors on these, you're in the money in all of these. The NASDAQ tested the box right away off the bat, but it's still above prior day. And you were talking about volatility and how the Dow moved plus or minus 1%, whatever number of days. So I tell you that yesterday, here's my take on the day. The bulls won because they had strong performances in two markets. The bulls lost because they had decimation in the NASDAQ. The bears won because of the decimation in the NASDAQ. The bears lost because volatility didn't even come to half of what it was the day before that. So yes, the VIX is high, but it failed to impress anybody yesterday. So yesterday was not a game changer of any sort. The NASDAQ is now in the seller hands on the daily time frame, so it will need to do a good work. And the way I look at it, this is a head and shoulder-ish loss right here on the NASDAQ, which has even lower potential. However, for this to happen, you would need a stock like Apple. I'm going to reduce it down to just one stock because it is
stock Apple.
Okay, so this is Apple daily chart, reset it 1 year. Okay, so here's the gap. We can't cuss. So this is the BS gap that happened on the Splitsville announcement right after Tesla and CNBC did specials on, hey, you got to chase split stocks, which just what? So unfortunately, they built a beautiful house on top of a stick with a hole in it. But that's the argument against Apple. And you can say that it lost a very important line right here, and it could be coming down to anywhere in this area. Now, against that argument, so for the NASDAQ to continue lower, Apple would need to collapse down to places where I think it's a bargain, and it has support at the POC, big point of control. Look at all that volume they have to slice through. And then you have a bounce level at 112, bounce level at 108, bounce level at 103, then to fill this gap, which arguably it got filled ahead of time with this failure at 400. Remember these failures, 399 point something, 398 point something, 399 point something, and then it fell apart. And then, we're splitting the stock, woo. So the argument is the Apple would have to collapse for the NASDAQ to continue that much further. That's my opinion. So the argument is with the bulls at this point. I went long yesterday, and I'll scalp some stuff this morning because I can't trust these markets. But I think we will meander and make new highs.
And that could very well be the case as well. I mean, I bought Marvel yesterday. I was saying I bought First Solar. I actually added a little bit to my Qs as well, my long-term Qs position, just because I had raised some cash and I wanted to reallocate it. So it's hard to argue. I mean, the bulls have, buy the dip has worked again and again and again. And this is probably just another one of those times.
Okay.
My argument is just, I don't know, though. Nobody knows for sure. So I'm saying if you're all growth tech and you're just heavy growth tech and you're getting hammered yesterday or in the last 2 weeks, you get these nice bounces, maybe it's time to reallocate some of those resources.
Right. So I said use the bounce to fix whatever broken just in case they revert lower. You can't take it for granted. So here's a fun thing I did. Last week, I can't remember when, I brought this ghost pattern, this pattern here that extends higher. I borrowed it from the last correction, quote, I'm putting correction in quotes here, and I slapped it to start here. Look how it played out versus actual. This is ghost versus actual, boom, right here. And now they're up here and maybe down here now. So is this ongoing this time too? So last time we had the same thing. We had a dip, a pop, a deeper dip, a pop, and then they went out.
Everybody else is quiet.
No, Nick, I want to get a couple of takes from the chat here. You're being asked about Google and PayPal.
Okay, so PayPal, same comments on Square. I'd be a buyer on PayPal rather than a seller. So you have to keep in mind, though, remember when you say, what would you do with a pop? So long term, it's a good company. I use it and it's very convenient. My son used it yesterday. So if we get a pop, first of all, it didn't make a lower low. And then if we get a pop, there's going to be buyers lurking inside this zone. Exactly where, I don't know. There's going to be a seller, sorry. And what the bulls don't want to do is revert down to this level. Number one, they want to stop somewhere around here. And if possible, avoid losing this one, because then you have some sort of a head and shoulder-ish pattern where you got a baseline that's lost. And when the baseline is lost, technically, the technicians will tell you this is going to be the drop. I usually say maybe, but you have to look left and see that there's a mess of buyers that will be in here. So if this fails and I'm long, I don't get out in here, because I should have gotten out right here if I'm fast enough. If not, then I'm inside support already. I don't think this will come. So if I'm long PayPal still, I don't get out. I'll fix my trade on the bounce just in case. If I want to get long PayPal, I can get long with a tight stop if I'm a trader. If I'm an investor, I can get long and see if it meanders back up to the mean. This is the mean of the trend that's been ongoing for months.
And what about Google?
Okay, so I look at Google for Google.
Okay.
I made the comment to somebody yesterday that it held up too well, and it's like an island. So I would roll out of it just in case, because it has froth to give up. It seems like it. I didn't calculate it from top to bottom. 7% versus 20 in NVIDIA. So if I ever wanted to own NVIDIA, I would probably roll out of Google for NVIDIA, because this one has already went on a diet. It's a falling knife, so your leap of faith. Don't know what's going on in it. I know there's some support right here. So the way I go long is I sell a put spread somewhere, and then if it hits my put spread, I'll take the shares and sell my protective put for profit, thereby lowering my break-even point even lower.
Okay. There we go. Nick Chahine is the author of Create Income with Option Spreads and sellspreads.com. Joins us every other Tuesday. He's on Twitter at RacerNick, RACERNIC. Nick, as always, we appreciate the time. Thanks a lot.
I appreciate the opportunity. Great show, you guys.
Thanks, Nick.
Thank you,
Appreciate it.
Nick. Thank you,
Yep.
Nick. All right. Let's get that off the screen there. It is 8:53. Let's do Dick's earnings real fast. DKS, one of those stocks that was in favor. There is rotation away from growth into pretty much everything else. Dick's falls into the everything else category, brick and mortar retail. This morning, though, fundamentals are coming into play. The earnings was fine, but they were very, very light on their guidance. Their EPS guidance for the year was in the mid $4 to low $5 range versus a high $5 estimate. Sales guidance for the year also was light. Actually, no, it was in line. But their earnings per share guidance for the year was very light.
The rotation is very. If you come in some days and you're like, I'm trying to identify the rotation. This rotation is like just biting you in the nose. It is so obvious today. Everything that everybody was hiding in yesterday is coming off hard here today, and that is retail, that is banks, and that is oil. Those are the stocks are all red. I know you can see the S&P green. You can say, well, yeah, but USO is trading green. USO is up again, but the energy stocks themselves are all in the red, and the reason for that is rotation. It's all rotation. Dick's, if they would have reported yesterday, and I didn't even, really listen to the numbers that you just said, or maybe I should, but, the numbers are kind of meaningless right now. It's all about sentiment. If they would have reported on the day that they were actually buying retailers, like yesterday morning, the stock would probably be up on it. But because they report on a day that they're actually rotating out of that stuff to a certain extent, and yes, I know there's some retailers trading higher, but this is a stock that was strong yesterday. The stocks that were strong yesterday are showing some relative weakness this morning. The stocks that were weak yesterday are showing relative strength this morning. So report on the wrong day.
67. This is just a huge level. Your 2-day low is right at 66.88. You had to spike down off the report only to 67.52. So had all these lows back at the end of January. You are now $4.50 off that low. I think if you pull back, I think you find buyers ahead of that. I wouldn't really be worried about a serious trend break until you breach that low from Friday. Now, on the upside, it's not going to be so easy because you had the decline, and then you had some people peeling out yesterday. If they weren't peeling out and they were getting in ahead of the report, they're stuck. So you got right now, I wouldn't look for any major upside. 72.37, that's been the bounce off the low. And if somehow you get through that, not too close to yesterday's low at 72.85. So let's just call, 72.85, 70, 73 resistance. So that's the range, maybe like 69 to 73, something like that. Let it bounce around, but still like it as long as you're above 67.
Let's do some ticker time here. Someone in the pro chat notes that the Doordash lockup ends today. I have not looked that up to confirm.
Be careful.
That's what
Be careful on that.
It's
People
down
selling
to
ahead.
Wow, that's just so the lockup expiration again. These I said what I said yesterday that I absolutely hate this stock. So
hey,
that hasn't changed. That
hasn't changed in 24 hours.
I don't like it at 120. It's fall 15 points when I said I hate it yesterday. I still hate it. Sorry. I mean, it could bounce. It's oversold. I'll tell you that. It's oversold. I'd sell bounces, man. I think this stock, when the dust settles on Doordash, this is like a $20 stock 2 years from now. Sorry.
I would just say the lockup period, just be careful on that because I don't know how many times I've seen like the dip, maybe take out the previous day's low, 129.01. What was the low from yesterday? The low from yesterday was 130.63. The old dip, and then people are looking for more sellers. So these days, sometimes you get some wicked rebounds. I'm not calling it. Pre-market low comes in at 123.42. So you've already bounced $5 off that.
We'll do a few more here. Cal C is asking for a good entry, or if this is a good entry in McDonald's.
McDonald's.
It's held up. Held up.
Have you tried their new chicken sandwich? Is the question.
No, I haven't been to one of those in I don't know how long.
How about the Popeyes chicken sandwich?
I tried that before the pandemic. It's pretty good.
Okay.
I want to own McDonald's. I kind of don't mind it here, but it's kind of in the middle of nowhere. So I don't. It's kind of in the middle of nowhere for me.
I mean, if you're buying it here, then you got to give it to 203 and change, right? If that's your risk appetite, then there's just three lows in the same area. I wouldn't want to be long it the next time it comes down through there because that would be the fourth entry. So that's where you're risking down to. And then what was the all-time high in this one? And we haven't talked Mickey D's at all. If you're looking for a rebound in this, I'll just figure real quickly the 50% retracement. I missed it there. I'll do it again. Maybe quicker to do it in my mind. 232 to, let's call it 30-point move. 15, 216, 217. Get up in that area. Oh, no, wait, 15, right? 30, 15, 218, 219. Get back half of that move. So a ways to go. Risk down though to that triple bottom.
Aviator 1 says the best entry for McDonald's is in the drive-through. That's true. There we go.
I want to try that Popeye sandwich, but every time I go by there, on Telegraph, the super busy road, people are parked through the drive-through on the Telegraph. I mean, if you want to get rear-ended, man, that's just,
Joel,
certainly not worth a chicken
I've
sandwich.
been trying to tell you, just use DoorDash, but you don't listen. Okay.
The guy's eating my French fries. I'm not going to stand for that.
Okay. Just to repeat what I said yesterday, this is a big week for investor days or analyst days. Today, DraftKings, Fortinet, Chevron, and Sonos have investor/analyst days, and these are all midday. These are intraday events. So expect headlines from DKNG, Fortinet, which is FTNT, CVX, and Sonos, which is SONO. That's intraday.
So Spencer,
today.
you talk about these investor days. I mean, if you're pulling the trigger on buys and sells off what they say in investor days, you better want to do a little more research.
Well, yeah, but also like there's a chance that they're going to give updated numbers. Like they might
Okay.
get like
All right.
like Twitter got that pop, and of course it looks bad
That
now.
ridiculous pop.
Yeah, Twitter
Yeah.
got that pop, and what was that from? That was from an analyst day like 2 weeks ago when they said, "Oh, we expect to grow X% for the next 5 years." You know what I mean? So there's going to be some headlines out midday. You don't often get midday headlines.
Fade them, then. Fade them.
Maybe that's the play. I'm not saying
the fade trade's been the play on everything.
Yeah,
really.
Yeah.
I mean that buying the dips and selling the rips continues to work. The selling the rips more. I like the play on the tech where he's shorting into the rip and then covering on the dip. Right now, I've kind of moved from just that style of it, but I mean it's still the play. It's still a lot at shop, and there's still going to be a lot at shop. You're coming in and buying stocks this morning, buying all your tech stocks, and doing it backwards. That's what it is. Like I bought a little Marvel, bought some first long-term investment portfolio, but on my trading side, I was buying, a different stock. I'm buying, I'm always just buying the dip and selling the rip. That's how I trade. It's what makes money.
That's what makes money. All right, 9:01. I think we'll wrap it up here.
Sure.
Everyone, again, smash that like button on wherever you're watching this show, whether it's YouTube, whether it's Facebook, whether you're watching our all-day stream on Twitch or on Periscope. By the way, Periscope is going away, like, in the next couple weeks. So I guess we can just live stream straight to Twitter. But smash that like button, everyone, please, and thank you. Show us your support. Thanks to all the comments in our chat, all these super chat comments. Thanks to Nick Chahine, as always, and all of just any viewer. We appreciate all of our viewers and listeners.
Our Spotify people.
If you're listening to the show via podcast, such as a platform like Spotify, please remember all the information on this show is meant to be used as informational purposes, not for investing or trading advice. Everyone, have a good day. We got a full day of programming ahead after pre-market prep. Joel, I'll see you later.
Okay.
All right. Guys, busy day today, as always, in Benzinga land, right? So we've got Get Technical with Neil Hamilton at 9:30, though we know he likes to start before that, which is fine. It's Tuesday, and every Tuesday in March is Women's History Month. Every Tuesday, we're doing a special panel with women in fintech. Jordan Robertson is our host, and every week she's going to speak with a couple of women in fintech, in trading, women who've made a living in this industry, and ask them sort of just about that, how they got there. If you know anyone who'd be interested, check that out. That's going to be at 10:30 a.m. Eastern time, right here on where you're watching this, basically on Benzinga's YouTube. SPAX Attack after that, and a good one today, guys. DMY Tech Group. They're going to be on SPAC Attack today. They are merging, I believe, with a quantum computing company. Mitch can correct me if I'm wrong there, but I'm pretty sure it's like a quantum computing company. Nicolo Damasi is going to be on SPAC Attack today at like 11:30. So I'm excited for that because I don't really know what quantum computing is, but it sounds cool, right? So we got SPAC Attack. We, of course, have the Zing Nation Power Hour at noon. We've got the BZ Crypto Show at 2, Biotech Buzz with VV Biotech at 2:30. We're going to just hang out from 3 to 3:30. Pre-market prep at the close at 3:30. And the Benzinga Pro Happy Hour at 4 o'clock. That's the slate for today. Kevin Greer says, Mitch, can we try to get Gore's Holdings on sometime? I'm going to forward that to the SPAX Attack team. I know I've written down a bunch of guests, and I'm behind on my reach outs. So I have to do that. There's a chat's been on fire with guests that they want to come on, and I'm behind on that. So someone suggested Stephen Van Meter or Andrew Friedman. I have to do these reach outs. And so I write down all your suggestions. And whenever I ask who you should come on, who we should bring on, I do write that down, but now I got to go and actually do it. So if you ever have any suggestions for anyone to come on any of our shows, you can tweet at me at SJIsrael. You can email premarket@benzinga.com or just put it in chat and I will. Yeah, DFV. Michael, I would love to bring on DFV. Roaring Kitty. Speaking of Roaring Kitty, I don't know if you all saw, he posted an update yesterday. He doesn't post updates every day, but he posted an update last night. and his GameStop position is worth a little over $40 million. With the stock and calls. So there's your weekly or bi-weekly Roaring Kitty update. What else was I going to say? Gosh, I feel like I had a few more housekeeping items. Oh, that's right. If you like Benzinga, if you like what we do, and you're interested in joining the team in a variety of roles, we're looking for on-camera people, right? People who can basically do what I'm doing now, right? Just talk to you about, doesn't have to be about the whole market, but an area of the market, right? If you're really passionate about options, for example, or you're really passionate about just IPOs, you love IPOs, or any niche, any market niche, shoot us an email, powerhour@benzinga.com, or PreMarket@benzinga.com. Those are the emails for 2 of our shows. And we will follow up with you, because we are in the market for more on-camera people who don't need a lot of hand-holding, who can just kind of go, right? You can just kind of go. Just talk by yourself. And, we'll handle the production and we'll help you with guests, but we're looking for people who can go, right? Who can just kind of take an idea and run with it for a few minutes. So again, email premarket@benzinga.com or powerhour@benzinga.com if that sort of thing is of interest. We're always looking for more writers. What else were we looking for? Writers, on camera, and I think that was those were 2. Michael, if you say you're a candidate, shoot us an email. Bring on Ross Gerber. Red, we brought Ross Gerber on last year. We should hit him back, right? Because Ross Gerber was last on the show in like the fall. Oh no, that was like a year ago now. Jeez. All right, we'll have to hit up Ross Gerber again. It's been like a year since we had him on. I did not realize that. Putting Ross Gerber on my list. What's up, Mitch?
Came to wake you up, my friend.
Cool. No, I'm just hanging out with the chat, and they're giving me suggestions for people to get on the show, and I'm writing them down to actually reach out to them. I've got a list of like 5 to 6 names here.
You got Julia Roberts?
No, I can add her to the list.
Hey, they're asking for her.
Wait, where? I don't even see that.
I saw it in the chat, man.
You saw it in chat? Oh gosh. Software engineers, yeah, that too, Stephen Hutchinson, that too. PreMarket actually for software engineers, just email powerhour@benzinga.com. And we will direct your email to the people who, because we are not, spoiler alert, we're not the engineers here at Benzinga. I don't know anything about anything when it comes to that. But yeah, if you, you can go to our jobs page, which it should be jobs.benzinga.com. It is jobs.benzinga.com. See all of our openings. But also just never hurts to email, right? Never hurts to email. Something else I want to add, I put this up at the top of the show, but I'm going to put it up again. If you want Benzinga Pro, if you like Benzinga Pro, you can get a discount, special discount code. It's on the screen there, YouTube 47. If you go to buy Benzinga Pro, YouTube 47, the 47 will get you 47% off the price of a monthly subscription if you pay annually, right? So if you pay a monthly subscription for 12 months using the code YouTube 47, it'll get you 47% off. That's the code they want me to give you. That's the code they want me to tell everyone about. So that's the code that I'm telling you about. That comes direct from the people in charge of Benzinga Pro. What else? Zach Morris. We've tried, Khalad, to get Zach Morris.
He doesn't exist anymore.
He's a hard. Yeah,
they took him off.
He was
took
quiet.
himself off.
He's been ghosting.
No, I think he literally came off Twitter. I think somebody hit him. Somebody hit him with some warning. Hey, buddy, you might need to stop pumping.
Oh my God, you're right. Holy,
what?
I didn't see
now,
that.
I'm the only FUBU bull left. I'm the only one that called it from early. They tried to say that he got me earlier, but I gotta see proof of that.
Zach Morris is gone. Oh no. Was that yesterday? I didn't even notice that.
Yesterday, man, we noticed it.
Oh, geez. That is that what is that? Is that a buy or sell signal? I don't even know.
That's a sell signal right there.
That's a sell signal?
My man got his money and heading to the Cayman Islands.
Oh my goodness. We all wish we could be Zach Morris.
Hey, I can't blame the man if he's in the Cayman Islands right now. So
wow. Holy cow.
Let's get to some stocks. One thing I wanted to call out is that media, publishing, specialty realtors, home building, and house building. Those are the ones that are up, man.
Mitch, I said maybe sell Viacom on the Paramount Plus line.
No,
that would have been a bad. If you did that, that would have been a bad decision.
Yep.
Okay. VIAC. I'm going to pull the chart up here on my screen so y'all can see.
Yeah, go ahead and pull it up.
That would have been a bad decision. I thought, hey, maybe fade the Paramount Plus announcement. But what I didn't realize, or what I conveniently forgot, was that stocks don't trade in a vacuum. They trade with the overall market, and the overall market, the theme right now is what we just spent the last hour plus talking about. Not the last hour, the last few days or weeks. It's not about what one stock is doing. There's an overall rotation out of growth into value.
Exactly.
Viacom is my chart's not up. Damn. I mean, Viacom is a value stock. It is definitely not a growth play. It is traditional broadcasting, right?
Exactly. So I'll mention a couple of media publishing that I see up on here. Yeah. So you can look at Disney, Fox, Dish, Discovery.
Fox. How is Fox doing?
You could look at Liberty Media. You could look at PSO, WWE even up.
Hey, a few years ago we had a WWE analyst on the show, and we got a ton of hate. Everyone in the chat was like, "Get this guy off! Nobody cares about WWE." We got so much hate for bringing that analyst on, and he was like a legit sell-side analyst who covers the stock. And our chat did not like talking about WWE.
That's a nice reversal on the daily or weekly. If you zoom back and you see where the all-time highs for this stock is up above $100, guys. So
yeah,
I'm going to keep an eye on this one because it was doing really good before the pandemic. If you look before the pandemic, it was doing pretty good. I mean, it was late like 2019 when we started really dipping, but before then it was taking off. So we'll keep an eye on this one. And then Dish also up. This is an interesting one that's up.
Well, Dish is being spun off, right?
That's what it is, right? I mean,
so I'm not sure.
Multiple highs here in the 37, so I'll keep an eye on it. But also, let's look at specialty realtors.
Hold on that thought though. I also noticed AMCX yesterday. I don't know if you saw that yesterday, but
a bunch of these.
Look at that. Look at that AMCX. Oh my goodness, it's back up. It's basically back to where it was 6 years ago, more or less.
Mm-hmm.
Oh my goodness.
Yep. And then if you look at some specialty realtors now, this is where you really start seeing some bigger greens also. DKS, Best Buy,
retail,
up about 4%, Ultra Beauty, ULTA. You can even look at a Tractor Supply company, Tractor Supply, TSCO.
Yeah.
It's a specialty realtor.
This is why investing is so freaking hard, right? So if you rewind the clock back, let's just say to like the summer, like July or August, right? Every single person, and I'm certainly in this group, and so are you, and so I'm sure most of our viewers were it's all about tech. It's all about tech, growth tech. That's where the party is. Forget the airlines. Forget everything. We got to have tech. And so I went out and I bought like a ton of like growth tech ETFs, right? I bought, I had owned Ark, and then I went and bought like ESPO, and I went and bought like F5EG, and I went and bought, actually I have a list up here I can pull up. I went and bought UFO. I bought the SPCX, the SPAC ETF when it came out. I mentioned 5G, K-Web, Cyber, all these like growth tech ETFs. And now I'm at a point where I've sort of got to step back and reassess here.
Mm-hmm.
What the hell am I doing? Right?
I'm looking at some kind of, the ETFs that have some more of the value names. Like let's say even a Jets, it should probably be starting to do good because I'm seeing the whole airlines start moving up. So if you look at Jets and you look at this daily chart, we're starting to get back towards February times,
And this is the ultimate challenge, right? Because it's so hard to not have that FOMO. You see everyone getting rich off tech, and you want a piece of tech too. But bottom line is, if you're staying diversified, you're underperforming, right? If you're staying diversified, you're not having as much fun at the party as everyone else. Now, that being said, if you're diversified, you're having a little bit more fun now, but there's no way to know when the rotation happens, when the party ends. You go back to last summer, it seemed like it was never going to, every dip was a dip to buy. It seemed like it was never going to end. Tech was going to go up forever. And of course, we knew that wasn't true, but that's how it felt. That's how it always feels every time, right? It feels, and you just don't know when the rotation is going to happen. So can you stomach underperforming the high-flying tech stocks for a couple months or a couple years, if that's how long it takes? I mean, if you've been underweight tech, you've underperformed for the last decade, right?
Yeah.
But in moments like this, moments like right now, that diversification is saving you. It's saving your ass. But that's what makes it so hard. It's you just don't know when the tide is going to turn. And definitely, so it's definitely turned for the moment. Of course, we don't really know if this is a permanent shift, if this is just, if we're going to look back at this in a few months and be like, oh my God, what an opportunity to buy tech stocks. You know, that could be a thing. We don't know. Or we could be entering a new paradigm, right? So that's the question. Is this 1997 or is it 2000? Right? Because people were saying, oh, the tech stocks are overbought in 97. Well, the party happened, lasted for 3 more years. So we don't know. And this is what's happening right now is certainly an argument for diversification. It's why my 2 largest holdings are VOO and VEU. But I own, like 7 or 8 growth tech funds. Smaller positions, but I got like 30-40% of my portfolio in growth tech. And then I'm now going to have to reassess sort of what to do. Where do I trim, right? If I want to trim, what do I trim and where do I go? Because if you're going to sell, at least have some idea of what you're gonna buy. Spinner's noting that I don't listen to Dennis. I'm doing it backwards. I'm talking about like a longer horizon, right? I'm talking about a longer horizon. So yeah, I'm doing it backwards from a trading point of view, but I'm not trying to trade actively. I mean, I make trades, but what I'm talking about right now is longer term horizon. I'm not actively trading every single day. But from a longer term investing point of view, why not reassess now? And again, I've sold nothing. I'm still long Cathy Wood. I own ARKW. I own UFO, KWeb, all these growth ETFs. And then I own like Ford, and a bunch of pot stocks. I've sold nothing, but I'm thinking about it. And now is as good a time as any to reassess from that point of view. So yeah, I'm doing it backwards from a trading point of view. That's definitely correct. But from an investing point of view, I don't think I am.
All right. So to give you guys something and to give you some of the gold that I'm trying to look at, guys, is I'll look at something that I'm thinking about getting into. And really, this is not a position that I'd often think about, but I feel like it's going to definitely have the right environment in the next couple months. So I'm looking at Cisco, Spencer.
Wait, which Cisco?
the communication stock, okay. Cisco system.
All right. See ya.
Yep. And so if we look at this daily chart, we've seen multiple bottoms kind of near this 39 level and 36 level. And now we're starting to get back above towards this resistance near this 48 and 50. I think 50 is going to be definitely an area where I'm going to look to see how it reacts there. But I think this is setting up. I think this is really setting up to give a nice rip, especially if we start getting kind of deals in infrastructure, 5G plays. I think, they have a lot of the thing behind the thing, and this could start going with a good catalyst push. It's right in the middle of the kind of the chart. It's had a push before the 58.26. So kind of I'm trying to see if there's some loading up here and it really starts getting going here. At least the overall sector is looking good. You could look at maybe Motorola. You could look at Garmin.
What is the ticker on Motorola? I don't even know what the ticker is there.
MSI.
MSI. Okay. Wow. I haven't looked at this one in a very long time.
Yep, a little bit slower mover, but definitely looking good at the resistance there. So I'm going to keep an eye out on some of those. And then also, you've mentioned before some infrastructure plays, and then something like that.
That's where
Have
I'm.
you got any?
That's where I'm eyeing. Again, I haven't sold or bought anything yet, but yeah, I'm looking at. I asked for suggestions. I got a bunch of tickers yesterday. People throwing in my way. U.S. Steel. There was a infrastructure ETF that I think Mark Chahine talked about a couple weeks ago. But I've got my eye on infrastructure. I don't know how I'm going to play it yet, but I'm definitely interested.
Yeah. So one that I've been looking at that's been making a move. Of course, you could look at GE. I'm looking to see if maybe Honeywell starts ripping. It could get a lift, and then
I would say
building.
I would call that gap a rip. That was from last year, right? That was from like October, November. I guess it's done nothing since then. What was that? That must have been earnings. That's what that was. That gap. I think it was earnings. We can check, but pretty sure it was earnings. Well, Honeywell's more of an industrial name. Yeah, GE is more industrial.
Let's look at some home building ones like LEN,
like
Lennar, or
KBH.
Exactly,
Yeah.
KBH.
All these charts look the same though.
Toll Brothers.
You know what? Here, let me just compare. All these home builders look exactly the same. TOL, KBH, and Lennar.
Group, PHM. That's one of the biggest house builders right now. Really,
yeah.
Okay. I know they're in here in Colorado Springs, and man, they have advertisement everywhere.
God, all these charts look the same. They look exactly the same. They just trade together. So this is why I wouldn't buy any of them. I would just buy all of them, right?
There you go. That sounds smarter, right? Separate your position, separate your capital, or look for an ETF that has them all, right?
Right, exactly. All these charts look identical. I mean that Lennar and the KB Homes, you can't even see KB Homes because it's underneath the purple Lennar chart. But
all right, before we get booted, I'm sure by Get Technical, I want to make sure that we touch. Someone's talking about it. Enrique here is talking if we can get the Roblox CEO. Why? Because the Roblox IPO is coming out. It's coming out.
Is that
Thursday?
I think it's Thursday. This is going to be the largest IPO of the year.
Yeah, it's going to be very focused on heavy gaming play that's been focused on for a long time. A lot of people thought it was going to go SPAC. Did you know that, Spencer?
Yeah, well, they like pull their IPO. They had an IPO last fall, and
they were trying both ways. You know,
they're trying both ways.
And you know, this is one thing I'm noticing from a lot of companies. They're approaching the idea of going direct or via SPAC.
These valuations are just stupid, though. You and I were talking about this morning. Like this Coinbase IPO, Coinbase is going to IPO at a valuation of $100 billion. That's more than NASDAQ and the owners of New York Stock Exchange combined, right? They're going to IPO. They're going to come to market at a higher valuation than NASDAQ and NYSE put together. It's insane.
It's the late stage bull market, man. The valuations just don't matter anymore. The story is everything. The story
that's clearly not true. Stories does not matter now in a pullback market.
Hey, look at GME. That's all I gotta say. Story.
Hey, where is GME at this morning? GME
story is
it's 221. It's holding up there.
I'm telling you, man. The story is everything because if fundamentals matter, would GameStop be at $220?
It's holding up this morning. Wow.
And would it came back from all the way down to 50s and 40s? Would it come back? No, I mean that's just showing you momentum is still in play. I think growth is still in play. You're just getting a little bit of a pullback now. The question is really is the rotation ever really going to come completely? And so my idea is the day that I see GME down, 60, 80%, that's when I'm pulling my cash completely off the table.
That already happened once.
But it was an expected move back down. So let's see if we get a tie up. Are they going to tie up the platforms again? Yo, Robinhood, are you going to tie it up now? If this goes to 400 today?
Okay.
That's the question.
Oh gosh, I'm with Wilfred
I'll
Frost.
put it out there.
I can't handle it. I can't handle it, guys. I can't handle it.
Hey, we're just getting started. And you know what I saw on CNBC today? People
No.
trying to talk about why GameStop is up here. They were like, oh, well, they can change their e-commerce and change their whole business around here.
I don't know,
But
guys.
at this evaluation, I can tell you guys,
I don't know. I don't know, guys.
care what you do to the business. You better go buying another business because it's not the underlining business that's right now in GME that has it at 220.
Can't handle it. All right. Mitch, Get Technical just went live with Neil Hamilton, an hour of charts.
Oh.
He's got Sylvia Bellrock on today's show. She's a great follow on Twitter if you're into technicals and into charting. So Mitch and I are going to hop off. The stream will redirect automatically. You may have to hit the play button, but on YouTube at least, it'll redirect automatically to our next show. And that's it. Mitch, I'll see you for SPAC Tech later.
Yeah, we got Niccolo Damasi. I can't wait.
All right.